Risk appetite has demonstrably lifted in financial markets today, and of course that comes courtesy of the trade war truce that came out of the G20 summit in Osaka over the weekend between the US and China. Now, it wasn't an entirely unexpected outcome. In fact, it was probably exactly what markets were expecting: a truce, a promise to continue talks but without a proper resolution. But nevertheless, the fact that there was some amicability coming through between the US and China and not an escalation of tensions has certainly been received well by financial markets. Now, we've seen stocks climbing as a result across the board today. Most pertinently, we've seen Chinese stocks going on a tear. We've seen the yen come off. That's supported a run higher too in the Nikkei, but the Swiss franc is also down as an anti-risk play. The Aussie dollar is up as a growth proxy. That also goes for the Canadian dollar as well as the New Zealand dollar. We've seen the US dollar climb a little bit, and that's on the basis that the market is pricing out some of the cuts implied in interest rate markets right now for interest rate cuts from the Fed at the end of the month. That's given a lift to bond yields, particularly US Treasury yields, and that's caused a sell-off in gold, which is now down below the US $1,400 mark. In other commodities, oil prices are up around 2%. That's obviously given us support to the Canadian dollar, which I alluded to before. But agricultural products, commodities there are climbing. They're obviously closely in focus around these negotiations as China pledges to buy more US agricultural products. But industrial metals are also higher today on the basis that maybe the global economic outlook is better than expected.